in order to face the market and to understand and extend your knowledge of the market. So just give me a second to send the push notification to the app, to the Hot Forex app. I think you have done it. So today we are giving this live analysis. Other than the fact we have, other than the fact, of course, that we have a lot of things that we need to consider, a lot of things going on in the market, and you need to be aware of it. Also, we decided to give this live because of the durable goods that just released, and also the Bank of Canada. So ahead of us, we have the central banks dominating the attention. Okay, so Bank of Canada soonish, actually later on in the US session, more precisely in less than 2 hours, an hour and a half. And we have just got the release of durable goods from US. Okay, so let me just check whether you can see me. You can see me, hear me as well. There is no audio or visual issue. Let me go to the chat. It suggests that I am live, so hopefully everything runs smoothly. If you can hear me, if you're here, guys, please feel free to add your comment. I will reply to anything you want. I can see that there are actually 10, there's 45 people here. So, guys, this is your session. As every single streaming is your session. You can ask anything you want. You can ask me to cover any asset that you want me to analyze it from technical and fundamental perspective. So, before I start replying to your questions, and hopefully you can hear me, let me double check also. The audio, yeah, is capturing sound perfect. So yeah, as I said, durable goods are out. Let me share my screen with you. Hi, Tech Solution. Hi, let me share the calendar with you, the economic calendar. I think you can see it. So durables are out. Let me refresh a bit. So 0.8%, 0.8%. Oops, here we are. For the non-defense ones, much higher than expected. So we have seen a rise in the non-defense capital goods, excluding aircrafts, in September. Durable goods contracted again because we have still a decline. It's a negative reading, but a smoother reading than what was expected. It was expected to be 3 times worse than what actually happened. Okay, what actually happened? So, oops, sorry. Where's my screen? And I'm not showing you. Sorry, guys, my bad. Here we are. Sorry. Yes, you want to analyze dollar CAD. Of course, it will be the very first that I will do. Don't worry. So as I was saying, dollar CAD. No, durable goods. So durable goods still a slowdown, but it's much less than what was expected. So it was expected to contract by 1.1% and drop by 1.1%, but instead it came at 0.4. So this is the expectation was 3 times more worse, 3 times worse than what was expected. So it's quite a good overall reading, even though, and also the fact that it has been revised lower. So the growth back in August has revised lower from 1.8 is down to 1.3. So actually mixed data over here. But if we sum this up, is like a negative reading, a negative overall report, because we have durable goods excluding defense 2% down. Okay, no, not growth, but 2% down in comparison with the August reading. Durable goods, including everything, still down, not as much as was expected, but still a negative reading. And the only one that actually growth was the non-defense ones. Good straight balance, preliminary one. Okay, very close to last month's, but still presenting deficit. And inventories very very close to last month's reading. Still, it's a preliminary reading, so we don't really. It's not of it's not a key driver. It's not something that is important. So let me stop sharing the screen and let's see together how dollar has responded. Okay. Oop, and it's a big dip so far. That's something expected, guys. It wasn't a good reading afterwards. It wasn't. It's not. So dollar dip actually start dipping before the release. Okay, it will start dipping before the release, and on the release, okay, it pointed another it make another leg lower. Right now it's back to 93.76. This is the 30 minutes chart. Okay, I remind you that the data were out 8 minutes ago, so a big decline for the last 2 hours. Is stacked a bit right now, consolidating and stuck at 93 sorry, 93.76. Let me see what's going on. So sorry for that, just give me a second to check my watch list as well, to be on the same side, guys. So it's trying, not sure what it's trying over here, but the data weren't good. So yeah, decline. I forgot to put my newsfeed on. Excuse me for delaying a bit. So even though September goods um, came out, so the trade came out at 96 billions of a deficit. Export came 7 billions less than August. Exports, imports came out just 1.1 billion more than August imports. So in general, we have seen imports higher, which is okay, but there was a sharp decline in export, and that is what fundamentally wise, it should add pressure on the dollar. So it's not solely the durable goods, guys. Okay, durable goods. Just to summarize, before we go to dollar cut, okay, just to summarize a bit, durable goods decline. So one thing, durable goods fell less than expected, 0.4%. Okay, so that's anyway something that should put the dollar in the back foot. And on top of that, we have trade balance also. By checking the breakdown of the trade balance, we have seen that exports actually had a sharp decline. Exports 7 billion less than August. So that's something that should add pressure on dollar, should keep the dollar on the back foot. Okay, it's not a good. It's not really there's nothing really to support on the data that we just got from United States, something that's to support the US dollar. So it's looking that the decline that started prior to hours prior the US session, sorry, 2 hours prior the release, is it started extending. This is a 30-minute chart in dollar index, 93.74 for dollar right now. And let's shift to dollar cut since you keep asking about it. Okay, so let me just. So, okay, before we go to dollar cut, by the way, just to let you know about the support and resistance levels, just to, okay, overall picture right here. MACD turning negative in this intraday short time frame, 30 minutes chart, guys. Okay, 30-minute chart. MACD turned negative, as you can see over here. RSI flirting with the oversold territory. A bullish cross has been seen an hour ago, and the fast moving average I keep pointing downwards, something that indicates that there might be further decline in the very, very short time frame for US dollar. So next support lies on yesterday's lows and the 93.60, let me be precise, 67 territory, while immediate resistance lies on the 20 period one and the 93.80. So if I just, let me just, so yeah, 93.80. Oh, two questions from Facebook. Okay, perfect, thank you. Cable, okay. Yeah, 93.67. The next support for dollar index 93.88. The next immediate resistance level in the daily picture. A key support for those interested in medium-term outlook, such as daily charts. This is a key support level as it has been retested several times since last week. And in general, the dollar index has found a foot on 93.45. So in a higher time frame, such as the daily chart, 93.40, and actually 93.45, 93.35, okay, this area between um, 8 days support and the daily Bollingers provides a key resistance level, support level, sorry, for dollar index, while on the upside, on the flip side, 20-day moving average remains a key resistance. So that was on dollar index. Let's quickly shift to dollar cut, since there are a lot of you asking about it. So guys, as I already told you from the beginning of this session, today we have Bank of Canada in less than an hour and a half, okay? So we have seen, let's start with the daily one, okay? We have seen, this is something that I posted like 2 weeks ago, I think. Yeah, there is this ascending head and shoulder, which has been broken on the beginning of the 8th of October, turning the long-term outlook for dollar cut to the downside, with fundamentals also supporting this scenario. But nonetheless, we have seen dollar cut since last week, actually for 5 days in a row, trying to recover a bit of to regain some ground, okay, and from the 122.80 level to post gains up to 124.30. So we've seen a bit of a rally to 2 weeks highs to 124.20, 124.27, okay. So 5 days to the upside. So mainly this rally that we've seen the last 5 days, as you might already understand, we keep saying that Canadian dollar is correlated with oil prices. So the rally that we've seen the last 5 days, of course, has to do with the softer recently oil prices, and on the anticipation of the Bank of Canada policy announcement and press conference today. So Bank of Canada is expected today to hold rates steady. So that would be, so to hold the rate at 0.25%, okay. However, what is key, okay, is the quantitative easing, the comments, the press conference in regards to the quantitative easing. So this is where the uncertainty this is what is actually less certain, what they will do about quantitative easing. So the current quantitative easing is a bit less certain, because it is expected that Bank of Canada will announce the end of this effective quantitative easing as the emergency conditions that existed so far when the quantitative easing was implemented. So this condition, they no longer exist. But from the other side, so by considering that program was initially introduced in order to help on these emergency conditions that derive from the pandemic, okay, but these conditions are no longer exist. This should imply to the possibility of Bank of England to ending the quantitative easing. However, on the other side, inflation is still high, okay, still elevating, and is here to stay, and globally, not solely from Canada. So that's the risk. So inflation is elevated and it's here to stay. Labor market in Canada presents some positive vibes, so it's recovering. So it has recovered, we could say. And the housing market in Canada, bonkers. So that's why the end to quantitative easing is not it's in focus today, and yeah, it's less certain. um, as I said, rates are expected not to change anyway. The expectations, the market's expectations, the market forecast in regards to rates are similar to Fed one, to the US one, to be shifted, a potential rate hike to be shifted back to 2022, and not within the year. Okay, but any surprise today from the bank, okay, um, it could add a lot of volatility on the dollar cat, on the Canadian dollar. So yeah, and it could actually provide a hint on whether will provide a clearer picture in regards to the rate hike, um, um, for the year ahead. So now, as I said, we had a recover. Let's zoom in to see the 1 hour chart. Topped at 129.27. A bit of a pullback. Let me zoom in. This is a 1 hour chart. A bit of a pullback ahead of the announcement, but overall sustain the gains that we have seen the 2 weeks high. So it's sustaining a move above 124. Now, the outlook, the overall outlook, and the intraday, so actually, sorry, the intraday outlook, not the overall outlook, because this is the 1 hour chart, as you can see. So the intraday outlook remains positive. Can you see the MACD? The MACDs keep rising. RSI is at 67, a bit flattened, justifying this consolidation that we have seen the last 4 hours. Parabolic SAR, below the price action, but really close to it. It's something that it indicates that we might see a reversal, but nothing confirmed yet. So we have a bit of a mixed technical picture over here in this 1 hour chart, because parabolic SAR is below price but close to the price. So that's a very, very prime signal that we might see a reversal. RSI, however, and MACD on the underside keep rising. So indicating the potential continuation of the uptrend. So let's see the 30-minute chart to see what's going on. So pull back, but hold the support at 124. As I said, it remains above 124 level. Let me put my intraday setup. So here we are. So fast moving averages started pointing upwards again. So yeah, intraday remains positive, but anyway, it might be the market noise. So once Bank of Canada policy is out, once press conference ends, then we get rid of this market noise. We're gonna have a clearer view of dollar CAD outlook. But for the time being, intraday is keep presenting an appreciation of dollar cut with the next immediate resistance area back to today's high, so another 10 pips higher, while the support is has set at 124 round number, but also days floor. Now, if I get back to, so resistance area and support area for the short term intraday. Now, if we zoom out and go into the daily chart, so as I said, the medium and long term outlook for dollar cut remains negative. So we had this breakout of an ascending head and shoulders neckline, okay, back in the 8th of October. And that was a very, very important and significant bearish signal, which indeed presented a decline from 129 level down to 122 level for dollar cat. While if we, you can see that the asset remains below all moving average, just right. Oscillators are presenting still, are supporting still the negative outlook in the medium and long term, while as long as it doesn't get back to cross to reverse at least 30%, 38%. So that means to move above the 20-day moving average and get back above the 125 level, then the negative outlook is unlikely to change. So it needs to recover and to move above 125 level. As soon as it remains below its 20-day moving average with it holds a negative outlook overall. So hopefully I help you with the dollar cut, guys. Surin asked for it. Guccia asked for it. Hello. So who else asked for dollar cut? Perfect. So let's move on. Pound yen and cable. That's Facebook questions. So and pound New Zealand. So 3 pound crosses to be covered. So let's start with the cable then. Perfect. So it was a bit of an empty calendar in Europe today. We had just the data out of Germany, inflation, but nothing from UK as far as I'm aware. Okay. Sunak announced 150 billion spending rise in budget speech. Just happened. This just happened. So that it was a mover on pound. Okay. Let me. Oh, here it is. Yeah, I found it in my newsfeed as well. So, okay. So Sunak, so announced 150 billion. Where is it? Let me just. Here we are. Okay. So let's see what's going on with pound and Mr. Sunak. So let me just, guys. Okay, that's a breaking news in. So okay, so budgets for 2021. Okay, I'm not sure whether you're for the news, but that just happened, and that's why we might have seen. But that's so cable over here retested 137, so retested 20 period one, so 137 50 territory and returned back down, trying to retest back to this height is presenting a pullback actually. So so just come on more. Here's the live stream. So the so apparently the finance minister just announced. I'm in the gardens right now. I've managed to find it. Um, just announced the reduction of credit per NCATs, um, sorry, air passenger fuel and alcohol duties. What else it's going on in UK? Let's see. Um, Let me search, guys, what's going on in. So announced 7 billion uh, 7 billion pounds cut for business, 2 billion for universal credit. So okay, that's something that could explain a bit this small pullback for the time being for cable. So cable actually pound looks to be under pressure on this on the announcements in regards to the budget from the prime from the finance minister so far. So as mentioned, actually he actually unveiled 150 billion um, pounds spending rise. So, okay. So not a really, not a shock yet, or not a lot of volatility on pound in regards to this announcement. Let me check FTSE just out of curiosity, because before we cover um, the technicals as well. So let's check a bit FTSE. So UK, here it is. So muted reaction so far, despite the spending announcement and the cut announcement from some other sectors. So let's see. Da, 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 da. So we have seen a bounce in pound initially. So we have seen a bounce from 137 level. Can you see this, guys? Let me check. So I need to shift it. Here we are. So we have seen a bounce from 137 to 137.50, but it's in general in line with the dollar moves so far. So a bit of a pullback again, rejecting, failing to extend further to the upside. So we still pretty much strong dollar remains. So let me just see what's going on. Or yeah, you see that the dollar index that we have seen earlier, so managed to find the floor on 93.70 and starting to started a rebound already. So yeah, despite the news from UK, despite the bit mixed to disappointing US data, apparently the dollar remains um, uh, uh, remains quite strong for the time being. So okay, cable. Support, immediate support remains at 137, right, round number, but also as you can see, coinciding with 200 day exponential moving average and support area that we have seen for 2 weeks in a row. So that's a key support level for cable. So 137 key support, both in the medium term picture. So we are in a daily chart, but also for the short term as well, intraday picture, because you can see that this is the 30 minutes chart, is the days low, okay, but also parabolic 1 hour lower Bollinger Bands level as well. So key support level intraday, but also in the daily chart remains the 137, while key support remains the recent top that we had at 137.50. Let me just be precise, 53. Okay, coinciding with 200 exponential moving average in the hourly chart, the 20-hour moving average, also in the 1 hour chart, and the latest high. So key intraday resistance area 137.53, key support level 137. So let's see the overall outlook. So the intraday outlook. So pullback started, failed to extend gains. MACD remains okay. MACD actually flatten at a neutral zone, so consolidation or actually yeah. So yeah, it's at zero. RSI just crossed below 50. Stochastic hasn't really give us a bearish sign yet since there is no cross yet, bearish cross of the two stochastic lines. So we remain, guys, with this is a bit um, there is not a clear view over here. So you can see fast MA is flattened, MACD is at zero, RSI slowing is not slowing down, but yes, um, we need to be a bit patient in regards to cable to see either a bearish cross from fast moving average, an extension of MACD, a bearish cross from stochastic in order to confirm a move back to 137 level. Okay, I'm not sure what's yeah, remains the case in the 15-minute chart as well. Down, not the fast moving average haven't crossed yet, so let's wait and see. Pound yen, pound yen, pound yen, and pound New Zealand. Okay. Okay. So pound yen, sorry. So posted, extended lower, another dip for a second day in a row, down to 155.70, actually breaking the support area that we have seen, support of the low level of the week, extending a fresh low for the week. So 155.77. Intraday picture remains negative despite this recent rebound that we've seen the last 2 hours, but the intraday picture remains negative as MACD is below zero, RSI at 30. Some a muted reaction from stochastic. Try to post actually a bullish cross, but still remain below the zone. Sorry, while it has posted lower peaks, indicating that for the time being and for the short term, bears are in control of the asset. So 155.70, the immediate support level, while the last session's high at 156.38 is the immediate support level. I mean, the 1 hour chart, guys, so you understand that these support and resistance levels are the immediate ones. Now, if I zoom out and go to a higher time frame, okay, such as the 4 hour one, only, and then the daily one, a move back above the 156 territory. So actually one, no, sorry, not 156, it should be, I would be precise, 156.70 could turn the attention back to 158 and 158.50 level, because it will present a reversal of more than 50% of week's losses, but also a cross of the 20 period moving average. So 156 60, it's our medium term resistance because it could trigger the attention back to the upside, and it could imply to a resumption of this more nearly 2 months rally and the retest of October highs. Okay, so intraday 156.38 resistance level, while in the medium term 136 60 remains a key resistance level for the asset. So so what we literally have um, is an overall weak yen against pound, and that's something that we have seen against all the major assets in general. Yen is under pressure. um, um, so something that we had something that extended that actually um, caused further weakness on yen. There was a news this morning in regards to purchasing foreign bonds without hedging currency risk. Um, so that initially helped a bit the yen, but the yen. Let's not forget that it remains driven by yields differentials, and yeah, by yields differentials and against the other major economies. So let's move on to pound Kiwi. So commodity currencies actually are well supported in 2021. So, and this is something that we could see in pound Kiwi as well. So Kiwi, Aussie, Canadian dollar in general are driving and supported and get stronger and stronger due to the surge in energy prices. But also this morning we have seen the Aussie and Kiwi rallying after the inflation in Australia beat expectations. So that could also support a bit these correlated assets such as Kiwi. So this is the daily picture, guys. Decline since the beginning of October. So overall outlook for pound Kiwi is negative. MACD remains negative. Stochastic just posted another bearish cross as they moved below the 20 level. RSI 24 overbought, but it doesn't point to the upside. It keeps pointing, oversold, but keeps pointing downwards. So there is further steam to the downside for pound Kiwi. So next support level, if the asset extends losses below 121. Let me just let me put the weekly chart, it will be easier. If it extends losses below 120 190 160, then next levels to be seen will next level to be seen sorry will be the 189 and 190 and 189. But overall you can see that the outlook remains negative. Um, um, so if let me just zoom out a bit. So the asset already retraced more than 50% of the last year gains. So that opened the doors to last year's bottom as well. So next key support level 191 61.8 Fibonacci level, so a key retracement level. So we might see a bit of a consolidation or a bit of a correction over here. While if the 191 level breaks, then this could indicate that doors have opened for November 2020 lows and the 184 level. This is in the long term. Intraday now, 1, 2, 3, 4, 5 hours in a row to the downside. Fast moving average keep extending lower. MACD negative, RSI failing to cover. Sorry, RSI, yeah, the same, keep pointing downwards. Stochastic, the same. So an overall a negative negative bears are in control intraday as well. So decline uh, um, um, continues. So let's see again your questions. So we have covered all the pound crosses that you ask. Aussie, New Zealand. Okay. Aussie, New Zealand. Here we are. Should be okay. So let me get rid of. Actually, I will not. We have a small rebound over here, but so let's see what's going on over here. So the asset return so far today, more than 20% of the gains that we have seen the last 4 days. So remains, however, below the 20-day moving average, and yeah, and okay, so below the 20-day moving average, parabolic star keep pointing to a pressure. A bit of a mixed, actually neutral outlook. There is not a really clear view, I'm afraid, in the medium term, at least, Geoffrey. So remains below 20-day moving average. Okay, so in the medium term picture, we cannot really confirm a potential rebound or a potential rally for the asset because parabolics are negative. The asset it's below the 20-day moving average and 200 moving average, and momentum indicators are neutral. So overall, we could see consolidation, okay, neutral outlook. Let's zoom in and see the 1 hour chart. So a pullback, a decisive pullback intraday. Now that I understand why you ask for it. So decisive pullback after posting and breaking the second resistance of the day, it came down again, returning back below its first resistance of the day and keep extending lower. Let me put the intraday template on. Okay, it's a white one. It might be useful. So bearish cross from fast moving average, and as the fast moving average keep aligned lower, indicating further decline. RSI cross 50 is at 44 and keep pointing lower. And stochastic the same, flirting with the 20 level, so they haven't reached oversold territory yet, and they keep pointing downwards. So it looks that from the technical perspective, intraday there are still further negative bias for Aussie Kiwi. So by connecting the recent lows, or the recent fractals, that's up to you, whether you want to connect the fractals or the body of the candle. So we can see that next support level for the asset is at here it is, 1046.40 level. So yeah, let me just, yeah, 1046.50 to be precise. Next support level intraday for the asset. So the trend line, by connecting the lows, the rising lows, the higher lows that we have seen since last week on this 4 days rebound. So next support 1046.50 as the asset keep extending lower with 3 quite decisive bearish candles in the hourly chart. ATR is at not 1 2. That is actually that pretty much agrees with the trend line. So it's in line. Yep, yep, that's correct. Okay, perfect. So gold. So overall, gold has appreciated. Actually, not has appreciated in general since the end of September, but we have seen it consolidating so far this week. So we had a boost on Monday, a big decline on yesterday, actually breaking and closing below 1800s, which is a key level to be watched. And right now, it's pretty much where it started today. It's flat. So there was some kind of a um, so far a doji candle though, but yeah, let's see intraday what's going on. After it bottom at 1781, after bottom to 1782 level this week, tried to recover some gains, and intraday, let me put the 30 minutes chart, it will be more useful. So intraday in the very short time frame was in a bullish cross of the fast moving average of 5 and 9 exponential moving average. And actually, this rally hasn't looked to run out of steam yet, as the fast moving average keep lying higher. RSI the same as 62, but a bit flat. The same start from MACD and an early bearish cross on stochastic. So actually, you need to be a bit patient with gold, guys, because there are some mixed signals from the technical analysis. So neutral picture from RSI and MACD as they have flattened a bit. Stochastic posting a bearish cross and is coming down below 80, while fast moving averages I keep pointing upwards. So there's a mixed signals over here in the technical analysis. So we might see a bit of this might be the end of the recent rally, intraday rally that we have seen for gold. So you need to keep an eye on the just to be so zoom in. You need to keep an eye on the recent high at 1796 as your immediate resistance area, and the okay, and the 1790 as your immediate support area, because a break and a close of the 1 hour candle below that level, it could resume again. Actually, it could retest again the it could trigger the attention into the 1760 territory. Overall, however, as long as it sustains a move above 20-day moving average, it remains in an upwards channel. A break below that within the week or within the week, it could bring the dollar back down. In general, we keep seeing yields rising, treasury is rising, and a dollar holding like strong, then this could imply to further dip for gold. We have cover pound New Zealand. You're welcome name. S&P 500. Okay. Okay. So just 39 minutes to go until the rate decision. Okay, S&P 500. So in general, we have seen yesterday, I'll start with yesterday, another rally of US major indices in general, the stock market into fresh highs once again. But, okay, and actually, but we've seen these gains fading a bit so far. So S&P over here, of course, the overall outlook. Let me just the overall outlook. This is the daily chart there at Samuel. Uh, Remains positive. You can see that it has posted another record high. MACD aggressively higher, strong positive momentum. RSI still the same. The asset is above all its moving average, so overall positive picture, positive positive positiveness around USA 500. So a pullback could be seen only if the asset comes back down below 45 level. So okay, that should be round here, and that doesn't look enough because it's in place to only 23.6 Fibonacci level retracement, which is not a strong retracement level. So actually 4460 is the long-term support level, a key support level. So this is in the long term, okay, in the medium and long term. That's 45 is around here. So now intraday, as I said, we have seen a bit of a slowdown, a bit of a pullback with the asset sitting lower. However, more of a neutral, um, more of a neutral. We could see more of a neutral picture over here because the asset really stuck between 45.50 and 45 70 80 level. So a break of 45.76, which coincides with hourly Bollingers and the latest up fractal, could open the doors to 45.87, 88, or even a fresh high of the asset with, let's use our Fibonacci expansion to identify the next resistance areas. So that could turn to the attention, as I said, yesterday's high and 45.97 level. Now, to the downside, support remains at days, actually weeks low, which is at 45.55. A break below that, it could, let me just, it could trigger the attention into 45, 45, 45, 40, and even 45, 30. That's that immediate support levels, guys, and immediate resistance levels. So I have used Fibonacci expansions to identify intraday, immediate, short-term time frame, whatever you want to call it, support and resistance levels. But in general, the current picture, the current intraday picture is neutral. So the asset so far today is in a consolidation, bouncing between 45.50 and 45.75, 45.50 and 45.75. So only a break between this, the low and the high of the day could provide an intraday, the intraday outlook for the asset. We discussed about gold. We've seen gold. Oil, Shorema oil. Where is my oil? By the way, before I shift to oil, since we are discussing about the US index, I forget to mention the earnings. It's earnings report, right? It's earnings season. And actually, so far, we had a very, very strong third quarter, a very strong earning release, something that provides further support to the Wall Street indices like USA 500, USA 100, USA 30, so Dow, Nasdaq, and S&P. Okay, so have this in mind. We've seen Microsoft and Alphabet yesterday night reporting 110 billions revenue holes. And actually, we're just 3 minutes before the the US Open. So the release yesterday, because they have been after the close, after market close, the strong earnings from Apple and Microsoft and Alphabet, um, could provide further support to the US stocks. So have this in mind. Keep an eye on the tech giants. Okay, so oil. Yes, sorry, oil. Should be somewhere here. Where's my US oil? Here we are. Okay. So this is the hourly chart. A bit of a dip for oil since yesterday, and actually a significant dip. So it's this dip actually, this oil decline. It was after the higher than expected rise in stockpiles. So this is something that added pressure to the oil, even though the overall outlook, guys, remains in rally. You can see this rise since August 21, and if I go into the longer time frame, you can see the long-term rally from pandemic's bottom. So anyway, overall outlook, the upside fundamentals keep supporting the oil, but let's see what's going on. So we had a decline down to 92 level, so 82, sorry, even posted a low, breaking them, actually even touched the, actually posted a move below 82 level. However, we have a double fractal over here, broken as well. So let me put this. Okay, broken the double fractal, resuming negative bias, RSI extending below 37 and pointing lower, MACD also, as you can see, no, you cannot see it, obviously. Okay, now you should be able to see it. So RSI, as you can see, keep moving keeps moving lower and still pointing further to the downside. There is further area to be covered, strengthening the continuation, the potential continuation of further decline for the day, intraday, for the next few hours for oil. RSI though, sorry, stochastic though, just cross 50 level and it keeps pointing upwards. So we cannot really can say that. Yeah, not really sure whether this will continue. It's anyway, we have 30 minutes away from the less than 30 minutes away from the BoC. So this is something that um, um, so the market noise is it doesn't make it clear over here whether we're gonna have further pullback for oil, but um, RSI is down, fast moving average keep pointing downwards, but stochastic is shifts higher, so that looks to be a limited decline, guys. So let's wait and see. If I use my Fibonacci's over here, this might help us. Oops. Sorry. Here we are. So, and I want to apply the Fibonacci levels. Came down. Okay. We need a confirmed closure below the 82, let me be precise, 81, 80 level. That this is something that could alert further losses and a retest of 81.30. But for the time being, it looks that bulls are fighting over here. That's why we've seen the asset sustaining a move above 82, and that's why we've seen a bit of a mixed picture from our momentum oscillators. So wait until Bank of Canada is out. This will help to see whether the oil could extend lower or not. But overall, the outlook is still positive. So yeah, a close of this hourly candle below the 81 could retest the 81.30. This is what you should keep an eye on. What is the 30 minutes saying? Down, 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 found the floor, up higher again. So you can see, yeah, this looks to be, it sustains a floor at that level. So let's see. So we have done a cable dear divine success. I'm not sure whether you have been here, but let me quickly check cable once again. And so, as I mentioned earlier, it looks that despite the news about from the finance minister in regards to the budget, um, the 150 billion pounds on spending plans that the finance minister Sunak has, the um, the pound is turning back, the cable is turning back down again. It's generally looked to be in line with a still solid dollar. So what you need to check is this key support and resistance levels. So intraday support remains at the 137 level, round number, bottom of the day, coinciding with 200-day moving average as well. So this is a key support level intraday and in the medium term as well. While resistance intraday holds at the confluence of 20 and 200 period moving average in this 1 hour chart at 137.50. A break and a closure above that level could open the doors to 138, while a shift back down and a break of 137 could open the doors to the 136, 137. That's 20-day moving average. Okay, so put these support and resistance levels on and keep an eye on your cable, dear divine. But overall, long term, medium term outlook for cable remains positive as long as we don't see it turning below 137. Okay, and intraday it's still negative as it has reversed again, failing to break uh, the 20 period moving average, and with fast moving average pointing lower, Bollinger's expanding lower, MACD negative, RSI turning against down, so intraday remains under pressure. What else? So guys, okay, if you want to use fractals, the Arbitra, fractals provide immediate support and resistance levels. So, for example, um, so let me just okay. Let's actually stick to the cable. So that level over here. the 135, the 3750. Other than the fact that the confluence of 20, 200 period moving average is also a double down fractal. So it was initially support yesterday, but now converted to resistance. So fractals could help you identify immediate resistance and support level. So that's why we have another latest down fractal over here. So that help us, even if we didn't knew that. So even if you didn't use anything else like moving averages or indicators and etc. Okay, if you are a price action trader, solely checking the candles, you could use fractals because they provide easily immediate support and resistance levels. So in this case, based on our latest down fractal, 137.09 is the immediate support level, and 130, actually the latest fractals will go down, it will be these two over here and this over here. So to the upside, we can identify using fractals two resistance area. The very first one, by considering this latest down fractal, so it's at 135, 37.54, and the very next one, if that breaks, is at 137.80. So you can use fractals to identify immediate support and resistance levels, because a breakout of your fractal could trigger the attention to the next latest fractal, which could be useful for identifying the next resistance or the next support level, depending which direction your asset is into. So that's pretty much is quite straightforward with fractals. So, and it's a good indicator also for any kind of time frame. It could be used for intraday, for any kind of time frame. Uh, because anyway, the way it's being calculated is based on the latest up or down level, based on the latest five candles. Okay, um, so yeah, that's it, guys. I need to call it a day. Think I'm quite tired. So, okay, Jeffrey, each one of you guys has a different exit and entry strategy. I cannot really advise what you should do, but useful entry levels will be the breakout of support levels or resistance levels. So, how you can identify support and resistance levels, that's up to you. Like, from the technical analysis that we're just seeing, fractals could be useful for support and resistance levels, and could also help you identify entries and exit levels, or Fibonacci. So there are a lot of things that you can, yeah, that you might consider, but you need to have your own, identify your own strategy, and as a consequence, exit strategy and entry strategy as well. Okay, but yeah, you need to consider. It depends on which indicators you are using, which ones you're using your daily routine. So you don't have to use all these, of course. This is getting messy, but if you like using moving average, then this could be useful for entry levels. If you like using parabolic SARS again, or if you like using, so it depends on your style and which indicators make sense to use to you. So depending on which indicators you're using, your indicator could trigger you, will help you identify entries and exit levels. Okay. Guys, I will call it a day. I'm quite, I'm running out of steam. Actually, we are an hour live. Jeffrey, if you need any further help, if you're struggling with entries and exit strategies and or any kind of indicator, let us know. Send us an email at webinars@podforex.com and we will reply as soon as possible. So, yeah, I will call it a day. We are less than, where's my calendar? 20 minutes away from the Bank of Canada rate decision and policy report. So, as I mentioned, guys, rates are expected unchanged, but what is really into focus is the quantitative easing, whether they will actually confirm the ending of it or not. So, yeah, this is where the attention will be, and this is what in my um, this is the anticipation of it is what is causing this noise around Canadian dollar. So yeah, that's it from me, guys. I will call it a date. Thank you for attending. Take care. We have it's a busy day once again, other than the Bank of Canada. We have also Ms. Lagarde speaking 20 minutes after the press conference from Bank of Canada. We also have retail trades from Japan, but also is an earning. We have earning releases. So tonight we have Apple. Okay, so keep an eye on earnings as well on the tech giants. Thank you very much for attending. Hope you're having a great day ahead. Take care. And I'll see you again tomorrow with another live streaming with Stuart. Tomorrow we have the ECB monetary policy meeting, and it's expected to be in the spotlight. Yeah. So thank you very much, and see you again tomorrow. Bye bye.